In a series of tweets on December 14, 2021, Real Vision CEO Raoul Pal discusses poignant issues that have been on everyone's minds these past few weeks. The renowned analyst talks about why the space is the way it is today, some positive changes that he expects before the year ends, and the addition of certain big players in the scene. The CEO also gives some important suggestions for people who are in this for the long term. He explains that there would be lows, but everyone needs to keep their eyes on the big picture, which is bound to be truly gigantic. Welcome to Savvy Finance. In this video, we examine Raoul Pal's latest tweets about cryptocurrencies, non-fungible tokens, Web 3.0, and some activities that are underway and bound to bring positive changes, especially in the first quarter of 2022. Raoul Pal talks from the heart to small investors who have a lot riding on the digital space, as it is his practice. He tables the facts and what he expects before 2021 ends and during the first quarter of 2021. You might not find what you want to hear, but you will find what you need to hear. If that sounds good, please ensure you watch the video to the end, drop a thumbs up, and subscribe to the channel. Thanks for your continued support. Raoul Pal's series of tweets begins with him talking about some of the reasons why he believes the digital space is where it is now. It is no secret that we all had so many expectations for the year's end, especially with the advent of the institutional players. But here we are today. In his tweets, Raoul Pal explains that there are many reasons why cryptocurrencies and non-fungible tokens are performing the way they are right now. He names inflation, year-over-year rate of change, Fed balance sheet, and tax selling as some of the culprits for what we are seeing now. Raoul also explains that many investors are trying to rebalance their investment portfolio to return to their preferred risk level. These activities are being carried out on a large scale. They are bound to have some effects on cryptocurrencies and other digital assets, which are heavily swayed by demand and supply. Raoul Pal's first two tweets read, "Wow, everyone has gotten super bearish on everything in digital assets. I do think crimped excess disposable income due to inflation is partially to blame. The marginal retail buyer is more marginal. Year-over-year rate of change of Fed balance sheet is also a factor. A lot of squaring and rebalancing after a good year of owning risk. Tax selling too. But my view is that the game has not yet changed." Raoul Pal also compares the performance of this point of the halving cycle to the same point in past cycles. We should be seeing better performance at this point of the cycle, but that is not the case. So many investors are being super cautious. However, Raoul believes there is nothing to be scared about, as it only seems that the structure of this cycle is different from what we witnessed in the past. Given the new time frame, there is still hope that something big will happen during the first or second quarter of 2022. And many are scarred by past cycles when this point in the halving cycle produced the top. This cycle appears to be an elongated cycle or a change of structure. Raoul also talks about the general performance of cryptocurrencies and non-fungible tokens during the year. After the mini bear run of May 2021, things have pretty much been static for digital assets. Though Bitcoin picked up a little last month, and there were some incredible non-fungible token sales during the year, not many investors really benefited from the pump. As Raoul states in his tweets, we are yet to see a blow off top with record participation, and the rally from the July low has left most digital assets well below their highs. For example, after an all-time high of $69,000 in mid-November, the flagship cryptocurrency currently sits just above $48,000. That is a percentage loss of over 30% in just a little over a month. But Raoul Pal believes that everything is about to change. Funds will be allocating fresh P and L in new mandates in quarter one, and if that drives prices sharply higher, it will bring record new wallets, etc., and long-term holders will begin to put coins on exchanges to top slice. In another tweet, he adds, but meaningful institutional adoption is mandatory along with exponential new use cases. The adoption of Bitcoin by many institutional players has been making the rounds for a while now. Many popular analysts are positive that their involvement will bring the needed change for the community. Not only that, but they also believe that these changes will be on a large scale, sending Bitcoin comfortably into the six figures and beyond. There are also new use cases for Ethereum and some other altcoins. As Raoul explained in an old interview, Ethereum will be the money of Web 3.0, especially when the metaverse is fully realized. These things are bound to positively affect the coins and the rest of the digital space. Raoul Pal also believes that other bigger players, including artists and musicians, are gradually beginning to acknowledge the importance of these assets and the potentials for all investors. Plus, a rising realization of the importance of the Web 3.0 by artists, musicians, and brands. Some are cash grabs, but many are not. Some sort of tipping point has been reached, and I think it accelerates later this month and well into next year when it might get very frothy. So Raoul says things are looking up not just for Bitcoin and Ethereum, but also for other digital assets, especially those that already have the potential for growth. and we are already at the turning point for these changes. But everything is not going to happen overnight. The change we are expecting is close, but we are not quite there yet. While we wait, Raoul Pal has a few suggestions that will help you gain more from your investments if you are in for the long term. But that is not now. Sit tight, add on dips, and if we see another sharp rise in the entire space, reduce your more speculative holding and rotate to higher quality. Also, do not follow the pump. By the time you get on, it is too late. Be diversified in the small stuff. If you want to use leverage, add small premiums and options that you can write off. Layer 1s of Bitcoin, Ethereum, Terra, Avalanche, and Solana are the better core holdings. Non-fungible tokens are most speculative but are also innovating fast, so have a bit of that too. Most of all, do not get stressed by shorter-term moves if you are playing the long game. If it stresses you, you are too big and it matters too much. We all have a lot riding on this, but you cannot weep if it goes down 50% and chops for a year. The CEO and co-founder of Real Vision also states that there might be short-term surprises from Bitcoin and other cryptocurrencies, much like we have been seeing almost all year long. There is a bigger picture to focus on. He states that there might be obstacles in the way, but the future of digital assets is bright for everyone who invests in them. We do not know the short-term path, but with high odds, we know where it is going. The long game is all about sizing and watching the charts for fun, but not really caring until deeply speculation is rampant. Then take 50% or more off and grab stablecoin yields. In his 13th and final tweet, Raoul Pal predicts that the space is moving from retail investors to institutional players. He states that what we have seen from these new players in 2021 will pale in comparison to what they probably have to offer next year. He ends the tweet by wishing investors luck and reminding us all that he is not a guru.